Welcome back to the show, Laila. Appreciate you being here. You know what, Jeff and I were just talking. The stocks continue to make all-time highs. S&P at record levels. If you take a look at what's gone on, the backstop of the Fed, still a low interest rate environment, even though they have come up so far this year, and the amount of stimulus that's getting put in here. Do you expect this Goldilocks type of environment to continue for risk assets such as stocks?
We do. We really think that, the first 6 months of this year is all going to be about the stimulus and all the money that's going into the markets. And the next half of the year is going to be about pent-up demand. There's so much pent-up demand, and investors and consumers have money, and they're going to start spending it, and that's going to do very well. I mean, look at the expectations for GDP. They're off the charts, probably around 7%.
Yeah, and if you did mention that liquidity that's out there, savings rates are at 40-year highs. So there is a lot of money on the sidelines, which may, help propel equity markets to the upside here. But if you look at that GDP estimate that we're seeing across the street, whether it's 5, 6, 7% for the year, and I'm hearing whispers of an 8% number, maybe even double digits, is that what the market needs at this point to continue its move higher? Because if we get any dents in that, that'll definitely take equities off of these levels that we're seeing as far as valuations go. Correct?
Yes, of course. There could be. It's just not likely it's going to happen. You just can't put that much money into the economy and have all that pent-up demand. And even if we have a little bit of a disappointment in the numbers, it won't be dramatic. And if anything, we think there may be surprise on the upside.
Yeah, and I think a lot of people are predicting that just with the consumer spending out there and the amount of liquidity. But if you take a look at inflation, now yields have kind of stabilized this week, thankfully. That's got people moving back into the tech sector, kind of selling out of some of those cyclical winners that we've seen early in 2021. But if you look at growth and inflation expectations, and Fed Chair Powell is making some dovish comments right now and says that inflation is transitory at this point. It doesn't mean that it's going to last. Do you look at that as a headwind, or that the market's going to be able to, basically digest this higher inflationary environment, or at least a higher yield environment?
I think the market is going to digest well. I think what happened the first quarter of the year is that it just went up way too quickly. We went from I believe 0.75 last year to 1.75 just a few months. So the speed of the increase in interest rate were just a little shocking to the markets. Now it's getting digested, and we do think it's like the Fed says, that inflation is transitory, and that we're going to see a little rise in interest rates here and there, but it's just as long as it doesn't go up as fast as it did, the market will digest and growth will continue.
Yeah, I have to agree with that. I think the velocity and speed at which the rates rose is what put the dent into especially the tech sector. But what areas or sectors do you expect to continue to outperform here in 2021, as GDP and expectations for a booming economy expand?
We really like, of course, the infrastructure. We think that's going to be huge. We think it's definitely coming now. There's no reason that they won't be able to pass some sort of infrastructure bill. And then, of course, we like tech. Tech has underperformed since September. Part of it is because of this inflation thing. And so we do think big tech is coming back in a big way, and that the earnings are going to support the valuations here pretty soon. And then we also like financials. Financials are really poised to do well. The losses that they had reserved for are not coming in anywhere as bad as they thought. And then with the Federal Reserve allowing them to make distributions and dividends later on this year, it should bode very well for financials.
Yeah, and we've got earnings season coming up next week, kicking off unofficially earnings season. But if you take a look at that tech sector, is that the leg that the market's going to have to stand on, because it has underperformed the other three major indices this year, and if rates stay at these levels, is that the the projectile that's going to continue to move equities as a whole higher?
Yes, you need tech. Tech is a big portion of all the indexes. If tech is not performing, the markets will not do as well. We do think that tech is coming back in a big way.